making 30% returns without lifting a finger. With Mezz NFT, this is no longer just a possibility. Our groundbreaking platform allows you to invest in a mini farm and benefit from our sheep breeding operations. Earn up to 30% annual returns while we handle the hard work. Watch your investment grow as we manage and sell the flock of sheep. Our intuitive dashboard keeps you updated with real-time data on the flock, your investment's value, and expected payouts. Ready to join an exclusive community of savvy investors? Seize this opportunity to profit from cutting-edge agricultural innovation. Visit tgnpodcast.com, Mezz, and become a part of the Mezz NFT sheep breeding investment community today.
Hey everyone, welcome back to the Golden Nuggets podcast, and this is part 2 with Mr. Umar Munshi from Hazan VC and also Atlas. So my question just now before we ended the episode, right? I wanted to ask you was, what if there's a business, because most of the listeners are, business enthusiasts, they are planning to start a business, or even some of them have already started. So my question is, if they already have a loan, they really take the loan, and now they hear from you that it's actually prohibited.
Yes.
What can they do, or what should they do?
All right. So even for when we were talking about housing earlier, and now the context of business, right?
Yeah.
So once you decide or you recognize that you do not want to have interest in your life, then the intention and the action must be there. It doesn't mean that you need to immediately pay it. Right, you plan out something to the best of your ability and with the right intention. Right, so it's on a case by case basis, your own context, your own situation. If you can clear everything and still be able to move, then great. But if not, at least you have a plan to clear it as soon as you can or as fast as you can. And so that intention and that step to doing it is very important. Yeah, but there's two parts to consider. One is as Muslims, you need to clear loans. In Islam, loans means no interest. There's no such thing as loan with interest. It's wrong, right? So a loan just means somebody lends you money, you give them back. Just like a friendly loan. That one you have to pay back as soon as you can also. Right? But now there's an added component of, we know it's haram. So the seriousness of having to pay it back faster or clear it faster is even more important.
Okay. So based on this knowledge that you have, this was one of the main inspiration why you started Ethis, right?
Correct.
And my understanding is also Ethis is a peer-to-peer lending platform for any ventures, right?
Yes.
First of all, maybe can you share with our listeners what is Ethis, what does Ethis do, and what exactly is P2P?
Yeah, sure. And the concept of it.
Yes. So we exist to match funds from people, institutions who have money, extra money, to businesses and companies and causes. That's what we do. Okay, extra cash, in need of cash, we are the matchmaker or the facilitator.
Okay.
Right. Different from advising you or providing a platform to invest in stocks and shares, or crypto, or financial products, or unit trusts. We don't touch all of that. A lot of people are doing that. Right. So our space is called private capital market, or alternative investment, or fintech investment marketplace. These are the phrases used to describe what we do. Specifically as Ethis, the way we are formed is we are called a venture builder. It means we are one company that builds new ventures as part of the group. Right. Now the reality about building ventures, whether you're a VC investing in other people or a venture builder creating your own products and companies, the reality is the risk of failure is very high, and chances of success is very low. That's just the way it is. When you do something new, innovative, you will usually, more often than not, that venture will fail. Right? And a few will make it, and those that make it typically go very, very big. Right? So I just give you the concept of how this kind of businesses work. For us, we are a venture builder. We've been building ventures for the past 10 years in this space. We have technically a lending platform in Indonesia, which is called P2P lending, where we match those with money using our app to projects that require money. Right. So far we've funded about I think right now almost 1,000 projects.
Okay, wow.
In Indonesia.
1,000 projects.
Yeah, I mean not
Oh,
my money.
just in Indonesia.
Only in Indonesia.
1,000.
Yeah.
Oh.
That's like our main business. Of the group.
Okay.
Right. One way to look at it is, in Indonesia, the license, we're like a digital bank without deposits.
Okay.
Right. So we don't keep your money and then decide who to lend it to.
Yeah.
We just match you directly to the project or the company that needs the money. So that's what we do in Indonesia. We've been doing it for 10 years. Before pandemic, we were doing real estate. So our crowd, our community would invest to support or to invest in real estate development. Very specific. We did social housing. Right? So you help low-income people get homes, and you still make some money. Right? But after pandemic, everything changed. So we pivoted to small businesses. So if you go to our platform in Indonesia, unfortunately, it's only right now available for people in Indonesia.
Okay.
So from Singapore, you cannot invest. In the early years, most of the investment came from Singapore.
I see.
But now, after all these regulations and everything and all these requirements, it became not practical. So it's just local to local using our app. But you'll be surprised, Indonesia fintech is Singapore is very advanced in many ways. But I would say Indonesia is just as advanced in its own way. You go to our app, you log in using national ID, you link it to your bank account, you look at the projects, whichever you like, within the system you can transact. Right? So you're like browsing through projects and then deciding which one you want to invest in, all within the app. So that's one of our main businesses. We have other businesses and platforms in other countries also.
It's not like sales cycle. Shorten the sales cycle, make it easy for them. They have all the
less friction.
Less friction.
Because I mean, another issue is when you start a business, it's always difficult to get funding. And some businesses from the get-go, you need to burn money. Especially tech companies, right? That's why tech valuation is always very high. But I think this is a very good platform for people to like get involved and also perhaps made an extra money from their own investment.
And what's the difference is it's not loan. It's technically considered loan based on accounting criteria or characteristics, but it's essentially project-based profit sharing. So every time there's a project, typical formula is the company, the startup, and not the SME. This one is like more traditional business. They have an order from the health ministry to supply some equipment, right? So they need cash. They put in 20%. Our crowd, our investors put in 80%. So that's the capital contribution ratio is set. And then we agree also on a profit sharing ratio, which is usually the other way around.
Oh, really?
That means 20% goes back to the investors of the profit.
Okay.
And 80% goes to the entrepreneur. But the investors still make, last year was about 18% annualized. Which is
that's decent because you can get that from a lot of financial instruments.
Yes. 80% is high, but it's also high risk. You can lose your money if you invest in projects that fail.
I understand. Is this something that is applicable or is being done in Singapore as well?
Unfortunately, not yet.
Not yet.
Not yet. Okay.
We did explore getting licensed here and operating locally. But two things, as I mentioned, the market is small. And you cannot charge too much, so investors cannot earn so much also. Right? And then thirdly, MES is very tough, very expensive, very long process. If you want to get the approval. Indonesia also is tough, but because we already started there, we continued there. But Indonesia regulations are incredibly strict.
Wow, that's very interesting. So how does Hassan VC come about?
Right. So this is what's happening right now. This is the most exciting thing that we're working on. For Athis, we always have 3 tracks. The social finance, that means charity, for Muslim zakat, wakaf, korban, right? So we have global sedekah, which is a separate platform. Then we also do, as I mentioned, technically lending, right? But Islamic profit sharing, right? Short-term projects. The third one is equity. Equity is different from the other two. Right? Equity means you become an owner or shareholder in a company. And we were doing equity in 2 ways before Hassan. We had an angel group, loose group of people from around the world. And this group started because we raised funds from our network of angels. And then the community of our own shareholders became bigger. And we decided to open up to more people so we can invest in more companies.
I think for the listeners who don't know yet, can you explain what is angel investors?
Right. Angel investor, it's a nice term.
That's why.
Sounds a bit strange to be called malaikat. Angel investor basically just means typically individuals who would invest in early stage, risky but high potential companies. Right? So before the venture capital, before the VC, there are angels usually.
Okay.
Right? So when you start a new business, you go to friends and family,
Yeah.
right? Or you go to look for angel. You go look for angel investors.
Okay.
Yeah. So they are, some of them are professional angel investors. They know they have a portfolio and they will help you and they will contribute. Some are just they just want to put some money and take a chance on a new business.
Yeah.
Yeah. So that's angel investing.
Okay.
Right. So we had an angel investing group. We invested in 16 companies over the past few years.
Okay.
Different sizes lah.
Yeah.
The investment. And we also had in Malaysia an equity crowdfunding license, which basically allows private companies to issue shares through our platform, like a mini IPO, like a mini SGX.
Okay.
Right? So we have that license in Malaysia. So we had these two, but we saw that there needs to be a better way of doing it. Let me give you an example. We had an app called the Noor. Some of you, the Muslims, maybe use Muslim Pro, right?
Yeah.
The app or Azan, Quran.
Yeah, correct.
So the Noor is like their competitor,
I see.
right? And one of the co-founders is Nilofa, who's like top influencer in Malaysia, right?
Yeah.
So they wanted to raise some funds and they raised it with us. We
Okay.
raised for them on our platform 2 million ringgit, right? Halfway through the fundraising, randomly a Singaporean lady, I won't name her, put in 500,000 ringgit.
Oh.
And she had no transactions before this.
Oh, wow.
So I was like, who's this lady?
Yeah.
Okay.
So we met up with her. I met up with her. We called her and all that. After she transacted, we went to find out, right, what's her background.
Yeah.
Yeah.
And basically, she's a housewife who has savings. And she said, I like this business so much. It's so exciting and I want to give back.
Yeah.
So I decided to put my savings.
Okay.
But then I told her, do you have a portfolio strategy? How many companies you're going to invest in? Do you have more money?
Yeah.
She wasn't sure.
Okay.
Right? So there's a risk there because the Noor can fail.
Yeah.
And I hope, inshallah, they do well, but
Yes.
they can fail.
Yeah.
In VC, they make money from only 3% of the deals they invest in.
Oh.
Right?
Okay.
So you cannot invest in one company.
Yeah.
So, from there, then of course, she's now an active member of our angel community and she understands much better and she has a portfolio now. Right?
Okay.
That was 2 years ago. But that was the point. People don't know what they're doing on the investor side. Startups are not ready also,
Yeah.
a lot of them. So that's why we came out with Hassan. We are a venture capital fund, regulated as a fund manager. We invest in early stage startups and companies that do good things, right, and are halal. And the money comes from our angel group, right? So instead of angels putting money one by one randomly into companies,
Yeah.
they can park their money in our angel fund.
Okay.
Right? The difference here is we manage the fund manager.
Yeah.
So we collect, everybody puts in a certain amount, right? 10,000,
Yeah.
50,000, 100,000. We have a few million. Then we, because Alhamdulillah, we have a good investment committee, we have experience, we have networks. We decide which companies to invest in, right? And we have a sort of filtration system, a booster system where we have an accelerator. Accelerator is a training guidance program.
Okay.
Right? So we have a 2-month accelerator program. Companies apply. We select from, I think the last round we did just ended. We had 200 plus applicants.
Oh.
And then we narrowed it down to about 40.
Okay.
And those 40 went through our 2-month online program. Yeah. So in that program, we teach them all sorts of things. We bring experts, we bring our network. We teach them about the deeper meaning of the business also, not just the technical skills. Basically get them investable.
Yeah.
Investor ready. At the same time, we get to know them. We get to see inside. We get to become their friends. And then from the 40, we will invest in 10 of them. Right?
Okay.
All 40, we help them. All 40 go through the program. All 40, we introduce them to investors from our network. But we as a fund only invest in 10 of them.
Okay. So that means because you still have that angel investor punya pool,
Yes.
that is where you are connecting this group of 40 to these people.
Correct.
But you as the fund from other investment and other even companies that invest in your venture capital, this money is meant for the 10 that you see has the most potential.
That's right.
Okay.
We introduce them to VCs, we introduce them to everybody. But yeah, that is part of the program. But from that program, we will select the top 10 that we want to make the offer to and invest in them.
Wow.
Okay, so if right now I want to open a business, right?
Yeah.
How do I pitch to you to get on the platform?
Yeah.
So
What do you look out for? What are the criteria that will like make you like, wow, okay, this is the company?
So you got to get into the accelerator first.
Okay.
That is the process.
Okay.
Right. We don't randomly talk to any companies that come to us.
Yeah.
Okay.
Right. So you got to go through a 2-month program, learn the basics, and get to know us. We get to know you before we invest. But from the 40, right? How are we going to choose?
Yeah.
Right. We have a very experienced investment committee. They've done billions of dollars of transactions, but essentially for early stage company, the founding team matters a lot. Right? Because a lot of times you start with an idea, and over time the idea will evolve.
Yeah.
Right.
Yeah.
And then what I invested in 2 years later is working, but it's a different thing.
Yeah, it's totally not the same thing as what I invested early on. Yeah.
Correct. Right. So that really the ability to adjust, pivot, and grow, it goes back to the founders.
Okay.
Right. So the founding team very important, right? Especially if there's a second time, third time founder with a degree of success in the past.
Yeah.
Right. That's one of it. The other thing that we look out for, and this like specifically for early stage lah, is also the problem they're trying to solve. Right. There has to be a balance of challenging but not impossible. Challenging and not too easy. If it's too easy, everybody will be doing it. You cannot fight with them. If it's too difficult, you need a lot of time and money. Right. The trickiest thing and the most significant thing in any VC angel investment is timing. Right. Just think of Airbnb. I mean, Singapore tak ada Airbnb.
Yeah.
But if you go overseas, I'm sure a lot of us stay in Airbnb. Right.
Yeah.
If they had started 1 year earlier, they'll probably not make it.
Oh yeah.
If they had started 1 year later,
Yes.
it'll probably be
also
too late.
Yes.
But they started exactly when things were opening up, when the internet was starting to connect people, when the marketplace concept was starting to get known, then they came up. The technology was available when they started.
Yeah.
So that's just very important. Some companies are ahead of their time, they will die. Some are too late, it's saturated. So that's the tricky part lah.
Wow. How do we know as a business owner that our product is at the right timing?
You wouldn't know.
Short and sweet the answer.
You wouldn't know. You have to go to, I mean, of course you research, you hypothesize, you talk to people, you test it out, you have some pilots and all that lah. Right? All the stuff you need to do. But you only know when you launch and when you iterate. Iterate means when you adjust and improve your product. And if you realize that there's too much business coming to me, then that is where you know you have what is called product market fit. Product and market, it fits. Right? Sometimes you don't have product market fit because you haven't found the right market.
Yes.
Sometimes the market doesn't exist. Right? Your product is just not wanted. So that's very, very important.
And sometimes the product, the market haven't even not really
Not born yet. The market. Then you have to create that market.
You have to create the market. So creating the market is what we had to do, which was very difficult.
I was just about to ask you what challenges next part, but
it's very difficult, right? Like now we're doing angel investing, VC investing, that's halal. Believe it or not, we're one of the very few halal VCs around globally. Accidentally a pioneer again. And I'm happy that we have an opportunity to be a pioneer, but it's very difficult.
Creating the demand.
It's very difficult to be a pioneer.
Because creating the demand, like example, something a bit more relatable for Singapore context.
Yes.
Crypto. Crypto is something that of course there's market cycle, and of course when it peaks, everybody will tend to know about it.
Yes.
But because of the cycle also, people also think like right now at this moment, even though Bitcoin has crossed the all-time high, people are still thinking, crypto is dead. But the thing is, if you were to be the pioneer, the people who are actually promoting a crypto company or any blockchain company, a lot of people do not understand the concept, then your company may not be able to last and sustain the time period for people to get to know
mass adoption.
The mass adoption. Yes. So the thing is, how does a company itself stand by or not stand by, like perhaps get ready to be facing this period of time? Like what you having right now, you are pioneering in terms of the global halal VC, right?
Yes.
How do you want to like get yourself and get your company ready to face this period of time when the demand is only starting to pick up and pick up and pick up?
Yes. So I mean, it goes back to this concept of having enough runway or cash to reach that point of sustainability. And the startup VC world has changed a lot. It's no longer about burning money and growing.
Yeah.
It's about becoming sustainable as soon as possible. Right? Sustainable here means you're making enough money to cover your cost.
Yeah.
Right? So you must have a plan on how you're going to make money. And typically today, let's say your project is going to take time.
Yeah.
But within that space or within your capability, you need to find a way to make money still until you reach the ideal product or ideal stage. Right? So there must always be a revenue driver somewhere.
Yeah.
Or at least you have enough money to reach that point where you have a strong revenue driver. Yeah.
And
Today, another thing to share is VCs, investors are very worried. The biggest worry they have is you need 300,000, you say, for your product, for your business, right? To reach that level. I'm going to give you 50. But I'm not going to give you 50 until I know you have the full 300.
yeah.
Right? Because if I give you 50, you cannot find a 300, you may still not make it.
Yes.
I'll lose my money.
Yeah.
Right? So that part is very tricky now.
Yeah, because people are more aware on how to invest in a way in the smart manner lah.
Basically, the VC market globally, especially Silicon Valley, it collapsed about a year ago.
Yeah.
Market correction.
Yes.
Right?
Yes.
Any savvy investor, except those who follow the crowd, will know that when there's a crash, it's a good time to invest.
Correct.
Right?
Yeah.
The prices are low.
Yes.
Yeah.
So valuations are low now. That's why we believe it's a good time for us to start when the market is down.
Yeah.
Right? 2, 3, 5 years time, I think there will be many companies like us
Yeah.
when things start to go back up.
Yeah. Just now you mentioned that you're the pioneer right now, right? Would you? This is probably a personal question. Would you prefer to be the pioneer or would you prefer to be the 2MA, like the second mover
Yes.
advantage?
Correct.
Yeah. I think unfortunately don't have a choice. But yeah,
But based on preference.
hypothetically speaking, it's much easier to be not the pioneer.
Yeah.
To be the
true.
second or third one. Historically speaking,
Yeah.
even tech startups, the first few don't make it.
Yes.
Anybody remember Friendster and MySpace?
Yeah.
Yeah.
Like even creative also coming out with the first MP3.
Yeah, creative.
Yeah.
You get rolled over by the second, third, company that comes in, especially if they have more resources.
Okay, so what are some of the, like, you are going to have all these second mover advantage, third movers,
Yeah.
right? Are there, on your end, there are actions being taken to make sure that you stay at the top?
Yes.
I
Definitely.
think anything to do online today, in general, most of the time, unless it's very, very tech software, infrastructure driven,
Yeah.
is about community. It's really about the community or the tribe, whatever you call it.
Yeah.
Right?
Cult
You guys
following.
have your community.
Yeah.
Right? So once the community comes together in the startup world, it's very powerful. This recent cohort of 40 companies, 43 to be exact, they're all now working together. They're all now helping each other. They're all bringing investors to us.
Oh,
Right? They say, hey, these guys invested in us. They maybe want to invest in others. Right?
okay.
So this community is what makes it valuable.
Oh.
So Alhamdulillah, we have this first mover advantage.
Yeah.
And suddenly, coincidentally, I guess, a few other similar initiatives are happening in other parts of the world. Similar meaning halal focused startup initiatives.
Yeah.
Right? And they all came like 1 week later, 2 weeks later, 1 month later after us.
Yeah.
So we were accidentally the first,
Yeah.
and then suddenly a lot of others started coming out in other parts of the world.
Yeah.
Right? So it's quite cool that we started sprinting first. Yeah. But back to your question, what was the question again?
Like how you avoid like stay.
How do we maintain our
yeah.
strike there?
Yeah.
I wanted to share the model that we built after or that we emulate is like the Y Combinator model,
Yeah.
or is known as YC.
YC, yes.
Right? If anybody were to Google YC, you'll know what I'm talking about lah. Y dash Combinator. They started, I can't remember exact numbers, 15 years ago. Today they have 3,000 companies in their portfolio. And if you add the valuation or market cap of these 3,000 companies, it adds up to $500 billion. Right?
Yeah.
So that is the impact that Y Combinator had. I mean, they didn't do everything for these companies. They invested in the early stage.
Yes.
And these companies bloomed after that.
Yeah.
Right? So it's huge impact. Right?
Yeah.
So hopefully in 3 years time, 5 years and 10 years time, our portfolio will be not as big as them, but inshallah, very valuable.
Inshallah.
And
Even 1% is
it's
big enough.
And plus it's very focused to making sure that everything is halal.
Yeah.
Yes. Our target is to invest in minimum 40 companies. Right? So every cohort, the accelerator cohort, we invest in 10 to 12, 4 times or 5 times over the next 2 years. Then we just focus on supporting these 40 companies. So you as a means something interesting is most of the investors we have come from Singapore.
Okay.
Right? It's always been mostly Singaporeans. Singaporeans maybe don't have many options to invest halal.
Yeah, correct.
But it's not for everyone this investment.
Okay.
Right? There's a minimum threshold. You got to be a member first. You got to assess your suitability. Not everybody should be investing in this kind of thing. It's very exciting. And you can make a lot of money, but it's not for everyone.
You are based in KL, right? The company is based in KL.
No. Hassan is based in Singapore.
Oh, Hassan is based in Singapore. Oh, okay. Okay. So my question I wanted to ask, perhaps I reverse it in a way. Since it's based in Singapore, can businesses from other countries around the region actually participate in this accelerator program by Hassan? Okay.
The first batch is Southeast Asian. We had out of 43, I can't remember exact figures, but Indonesia we had 15, Malaysia also around there, Singapore we had 4 or 5.
Okay. Wow.
Okay.
And some of the Singapore ones are quite good, very exciting.
Okay.
Maybe we can find out more in part 3.
Yes.
Okay, guys, I think that it's been a very amazing sharing.
Yes.
A lot of golden nuggets in both part 1 and part 2.
Yes.
I'm like I said, I don't want to summarize for everybody. You guys go and tune in again, try to write your own notes.
Re-listen.
Right. And stay tuned for part 3. See you guys in the next one. Bye bye.